Hello, everyone. This is Rob Golfi with Remax, the Golfi team. Welcome to the Golfi Real Estate Show with host Stephanie Vivier.
Well, hello there, Rob. And it's not just you today. You've brought some friends. You've got Nick and Samantha with you. I understand these two are part of the backbone of the Golfi.
We satisfy the realtor. We satisfy the homeowner. And if it doesn't sell at the price that they think it is, they understand that they may have to come down to the market price, and it just makes things difficult. I've seen people. They put a house up for sale, and they'll tell their client, "Yeah, we can get you $850,000," but really the house is only worth $780,000. And so those people their expectations are that. And then what happens is somebody may come in at $780,000 on an offer, and they refuse it because their realtor said $850. Exactly. And then all of a sudden they reject that, and then 6 months later they can't even get $780,000. They're chasing the market down, and it's a big frustration. Happens many times, especially in the market like this, where you got to be very, very careful because it is a price sensitive market, and it's tough.
Samantha and I go ahead.
Yeah, no, I was just going to say, so with the predictions you guys are giving us here, looking at maybe like a hotter spring market and then things cooling off, what's the plan? Because things do change day to day, and that's why we rely on the Golfi team and all of the great numbers and stats that you guys can bring us. But people do plan a little bit further out. So if we're looking to make a move, either, maybe getting out of that starter home, getting into a bigger home, or looking to sell, how do we take those predictions you've given us and then make the most of that in 2025?
So my prediction is the market starts in Toronto, and it starts sometime in the mid to the end of January. It starts hitting in the Hamilton, Burlington area, February, March. And then it goes into Niagara, March, April. So if you're looking, let's say you're in Niagara Falls, St. Catharines, and I'm not saying like you might get a little bit more money on your house, a certain percentage, but it may not. But
then you're also buying higher, right?
That's
so it's
right.
all relative. If you're going to sell in a high market, you're buying in a high
Yeah.
market too, right? And if you're a first-time home buyer, just get in the market.
Yeah, just get in the market. But the one thing is that when you get it, when you're selling it's hard to gauge when the right time is. It's hard to gauge. Like it's tough because I'm saying, yeah, Niagara, it's March, April. It is. There will be more activity, more buyers in the market. I'm not saying you're going to get $50,000 to $100,000 more for your house. It's hard to gauge that. But the thing is, you have a better chance of selling, but you still have to price it accordingly to what the market's willing to bear, and that's the key thing.
Because everyone's waiting for the perfect time, so there's going to be an abundance of inventory hitting the market all at the same time as well.
Yeah, and I've overpaid on properties because I know, because I'm a guy that buys and holds, right?
Yep.
And I'll hang on to it because I know the market will outpace whatever it is because I wanted that property. And usually the ones that I've overpaid on are commercial properties. I said, listen, I'm going to pay for it, and because I know the market is that property is going to be worth double, triple in years to come. So I'm not going to let some other guy get it and beat me on that, and then all of a sudden I'll drive by there every time and say, gee, I should have bought that. I should have bought that. I should have bought that. And I've done that on houses on Dunn Street in Niagara Falls. I should have bought the house next door, but I didn't. I was calculating $2,000 was too much more money for the house. Can you believe that? $2,000. So anyway, but you learn your lesson. But the key thing is that the activity is going to pick up in the new year, and it's going to start happening in Toronto mid-January to the end of January. It's going to get into the Hamilton, Burlington market, February, March, and then in Niagara, March, April. I looked at the trends. I go back 10 years, and I see how the activity goes, and I'm telling you, that is it. That's it.
You can try to predict the market as much as you can, but it has to be when the time is right for you, right? When life happens, and if it's the time to move, then it's the time to move.
Now, if you can buy, I'd say the sooner the better, and selling your spring market is probably going to be the best time.
Yeah.
Yeah.
Let's talk high rises in Hamilton. There's some high rises set to bring a bunch of residential units to Hamilton. Although we've talked about, condos and things in the past, is this the right move for the Hamilton area, do you think,
Well, there's a lot of, you'll see some cranes out there. Now, the high rises that are being built, they're not high rises condos that were sold in the last 12 to 18 months. Those were sold in 2020, 21.
Yeah, when prices were higher.
Yeah, so they're building those. So those people, the people that bought them, they wish it takes forever to build because those closing dates are coming up.
And they also bought with lower interest rates at the time too.
Yeah, and now the interest rates are higher, and they paid higher on the thing. My theory is, investors drive that market, but right now, whatever you see being built and it's all condos that were sold in the early the 2020 21 that those people are going to start getting finished, and they're going to pay the price. The builders, the developers, they're paying extensionally for the cost of building, and the buyers that bought those, they're counting the days to make sure that they don't close. They take forever to close that deal and praying for the interest rates to drop so that when they do take over, they can afford it. But I'm not a big fan of condos as an investment myself, but that's my opinion. I don't know, Samantha, would you are you a big you invest in properties?
I do. I don't own any condos, but I think they're a great way to get someone into the market.
Yes.
For a first-time home buyer to get in, get some equity going, and get yourself into the market.
All right. Well, there's a bunch in Hamilton, and we'll see how that market goes as those condo projects continue to roll on. You're listening to the Golfi Real Estate Show. Today, we've got Rob Golfi with us. He's also brought along two sales representatives from the Superstar Golfi team. We have Samantha Kilburn and Nick Scorpinero joining us. And we've got more Golfi Real Estate Team show coming up next here on News Talk 610 CKTB. Welcome back to the Golfi Real Estate Show. I'm Steph Vivier, your host, and with us today we have Rob Golfi, also Superstar Golfi team agents Nick and Samantha joining the show, getting into all things real estate with you here. All right, so let's talk about something that can happen, which is falling real estate prices. And Rob, you outlined that a little bit for us today, where we could see, and we have seen some prices over the last year fall a little bit. Let's talk about the dynamics of falling real estate pricing.
Yeah. So what happens is people, what they do is they do the opposite what you should do. So when real estate prices, when interest rates go up, people have a tendency of holding back and selling because they can't afford it. And when interest rates go down, they end up buying, and that's when everybody's buying, and that's when you're competing and everything else. I'll never forget this. I remember I was talking to a guy, the older gentleman. It was the 1980s, like 1980. And he was a real estate investor. And he said, he was telling me all the properties that he bought. And I'll tell you, 1980, interest rates were, I don't know, like I was a young kid, but interest rates were, but interest rates were about 18%, 20%. Can you imagine paying 18 to 20% on a mortgage?
No, but then home prices were also,
No, but yes, home prices were lower, no doubt. But so
was your pay.
So was your pay. So was your pay. So this guy was a GM worker, and he was telling me that he was buying real estate, and he said it was tough. He said it was tough. But after that, like, the guy became super wealthy, because he was taking risks. And back those days, you can make deals. They're not like today. There's too many regulations. There's too many things. But back those days, you can make a lot of deals. You can buy houses for no money down. So you can, as long as you put your name on a house, you're good to go. But the one thing is, though, he was smart enough to know to buy when everybody was selling, and he sold when everybody was buying. So, and they're showing that how falling prices affect offers over time. So it says, as prices decrease, the behavior of both buyers and sellers adjusts to response to the new reality. Here's how the dynamics typically unfold. Increased buyer caution. When prices begin to fall, buyers think it may be cheaper tomorrow. So that's, you know what I
Waiting
mean?
for the crash.
They
I've
wait,
heard
yeah.
it so many times.
Yeah, yeah. And lower initial offers happen. The buyers sense a shift in the market, and they tend to make lower offers. And lowball offers become common with buyers. That's what happens in that market. Now, prolonged time on the market. In a declining market, properties often take longer to sell. It's true. That's an indicator that, you know, you buy. Price reductions become common. There you go.
Yep.
You know, but you really need, I'll tell you, when you're buying in a declining market, you really better have an experienced agent, because you want to know exactly what the prices of that house is worth at that time. Don't just go based on that one house and say, hey, they're asking 600,000. You may think 600,000 is a great deal, but really that house is only worth 500,000. So you got to make sure you know the market, and your agent knows the market. That is so important. You have to do an evaluation. You have to do an evaluation on the house that you're buying. You have to have your realtor.
Every single time.
And
yeah.
looking around at private sales and stuff that people don't have access to. The buyers today seem to think that they can just look at House Sigma and their real estate agents. They
Yeah.
know the price. House Sigma is not an accurate depiction of what a price is.
Yeah, yeah. So when interest rates go up, that's when you should buy. Now, interest rates are starting to come down right now. And like right now, I truly believe you got about a 4 to 6 week period right now that you can go and buy a house and make a super deal, close on it in 60 to 90 days from now. Interest rates are probably going to be down another half point, maybe another percentage. So you are in the right time to buy a house right now, just because the way the interest rates are going, and they have to drop them because developers aren't building. They need people to housing. No, there's no new housing happening as much as they want to, and things got to change. So, and that's why they're dropping the interest rate. So get a jump on it before that you're going to end up paying more for it.
Yeah, and the surplus of inventory right now, and people have been sitting for a long time. We've had some that have been sitting, and they're tired. Sellers are tired. They're either going to take it off the market and go through the whole thing again in the spring, or they're going to, entertain an offer with you at this time.
Absolutely.
So now's the time to make some deals. Now's the time to throw an offer that's lower than those asking prices.
Yep.
You can. There's always people that need to move and they couldn't sell, and you go in and put a deal together. You'd be surprised. The one thing that we do, and we teach this, and now other agents are listening, they're going to hear it. But when we put an offer together, what is your dream date? What is what does the seller want? We give them everything they want, but not the price.
Exactly.
we
put together a good story, and we have good evidence to back up
Yeah.
our price. We don't just
Yeah.
throw prices out.
Yeah.
We get the agent, questioning his own price.
Yeah, that's it. I don't know.
It's called master negotiating.
That's it. It is. We have a master class in negotiating here at the Golfi team.
But it's going to be, we wish we would have bought in Q4 of 2024. That's what it's going to be.
You have
this
options.
is the time. You have a ton of options.
Yeah.
You can still put conditions on.
Okay.
You can still check the house.
Yeah.
If you start to buy it in time where things do pick up a bit in the spring, you're going to feel a little bit more pressure.
Yeah, for sure.
Yeah.
Okay, just going back to the 1980s interest rate. So the 80s, July 1980, the interest rate was 12.25%. By August 1981, it had increased to 22.75. So that's
Wow.
the prime rate,
That's crazy.
right?
insane.
Yeah, it was a wild ride.
All those seniors right now say, "I remember those days." There you go. Thank God I'm collecting a pension now. Oh yeah, those yeah.
Speaking.
Go ahead. Sorry.
Oh, I was going to say, yeah, no, speaking of the offers that you guys put together, often there are different little schedules that the buyers and the sellers have to sign. And you have a cautionary tale for us today about one of those schedules not being signed.
Yes. Here's something that happens all the time. And this is what happened to this one realtor.
Problem solver extraordinaire. And as we head into the holidays, the Golfi team is working hard, just like Santa and his team. So if you want to make that move, go ahead and give them a call. You can even find out what your home is worth instantly. Go to golfihomevalue.com, 905-641-0308 to get in touch with the Golfi team. Rob, this has been so much fun. Thank you so much for bringing along Nick and Samantha. Great to meet you both.
You as well.
You as well. Thank you for having us.
Great.
And this has been the Golfi Real Estate Show on News Talk 610.